Next question, that is on capital gains tax, that is long-term capital gains tax on shares. So this question we have made set mainly from this year's Union Budget 2018-19, and this is one of the most important announcement of this year's budget, that the government have reintroduced long-term capital gains tax on shares and as well on stocks as well as on equity funds, that is on shares. So while announcing this new tax, that is which the long-term capital gains tax, government have made some provisions. So you need to know those provisions under the long-term capital gains tax on shares or equity funds. Now we will see that, okay, this question, Union Budget reintroduced the long-term capital gains tax on shares. Consider the following states regarding it. First statement, this would see investors paying 10% tax on the gains made by selling shares even after holding them for more than a year. Second is that all the gains made up to 31st January 2018 would be grandfathered. So there are certain, so regarding this initiative of the government in reintroducing the long-term capital gains tax, first point you need to note down is that the new long-term capital gains is 10%, so that tax rate is important, and there is a threshold also. If you have a gain of capital gain over 1 lakh only, this tax is applicable. So threshold of 1 lakh. Third point you need to note down is that this tax is grandfathered till the date at which it has announced. So this tax, new tax, was announced on 1st February 2018. So up till the investors who have purchased the share till January 31st 2018, they are exempted from the share which they are holding from this new tax. That is what we call as grandfathering. So any old investors who have brought the shares under the old tax law is there was no long-term capital gains tax on shares. So till people who have brought the share till this time period and the gain they have acquired till January 31st 2018, they are exempted from this new tax law, that is new long-term capital gains tax. So that is, so grandfathering as a concept is very important. Mainly this grandfathering clause is applied to new tax law, so that the people who have taken decision based on old taxation laws will be given a concession in relation to their old investment. So that the basic aim of the government for giving this grandfathering clause is that we can avoid a panic withdrawal from the old investors. Okay, so grandfathering clause have been provided under this new tax law, under the long-term capital gains tax, up till January 2018. The date can be easily remembered. That is a day before the budget was announced, and we all know that February 1st is the day, now the new date for presenting the union budget. So January 31st is an easy date to remember. Another important point about this long-term capital gains tax is that normally while calculating the long-term capital gain, indexation is provided. Means the impact of price increase has been considered, but in calculating long-term capital gains tax on share, it is without indexation. So indexation is not considered while calculating long-term capital gain on share as per this new law. If you note down these 3 or 4 important points, you can answer any question related with this long-term capital gains tax on new shares. Now the first statement, so you can say that, so normally the long term and short term, how it is decided is based on a year. For shares it is 1 year, for shares is 1 year. So if it is earlier, before this tax, new tax, if the long term, if there is a capital gain on a particular share, and that a capital gain means that shareholding is having a validity, means that particular share acquired by the investor is having a tenure of more than 1 year. So he was earlier exempted from the tax, but from now onwards that exemption is gone, because the long-term capital gains tax is now 10%. Even after you are holding that particular share after 1 year also, you have to pay the tax as per the new law. So this would see investors paying 10% tax, that is the new tax, on the gains made by selling shares even after holding them for more than a year. So earlier This is not the case, because if after 1 year means it was considered as long-term capital gain, and long-term capital gains on share was exempted in the earlier regime, not under the new tax law. So first statement is correct. Regarding the second statement, all the gains made up to 31st January 2018 would be grandfathered, or grandfather clause have been provided under this new tax law. So the second statement is correct. So answer here is both 1 and 2. It's very important for your prelims.